Welcome to the podcast. To learn about key funding trends and market insight, the podcast is co-hosted by Connected International. Now, here's your host, Mike Shanley.
Welcome to the Global Strategy Podcast. I'm your host, Mike Shanley. Today, our guest is Elizabeth Shortino. She is the former Acting U.S. Executive Director to the International Monetary Fund and the former Director of the Office of International Monetary Policy and the Director for Middle East and North Africa at the Department of Treasury. Elizabeth, great to have you on the show today. Thank you for joining us.
Thank you so much for having me, Mike. I'm really excited to be here.
Wonderful. Well, let's get right into it. You were the Acting U.S. Executive Director to the IMF. Is it fair to think of that role as comparable to the U.S. Ambassador to the UN, where they're the lead of the delegation, the voting member? Could you talk a bit about what that role entails?
Yes, that's exactly right. Although ambassador, it's not the same rank, but it is a Senate confirmed position. I was nominated to do that position in the Biden administration. But yes, so representing the office, the IMF Executive Board is made up of 25 board members representing all 191 members. So my office obviously represented just the United States. And that role, I really advocated for U.S. positions, how to push the IMF to do things that the U.S. thought were in its interest and in our interest. A lot of that role is spent walking the hallways, talking to members, my counterparts on the board, members and the staff who were doing all of the work, and management, including Kristalina Georgieva, the managing director of the IMF.
So a lot of that role is really conversations, diplomacy, just understanding maybe or maybe what were the goals of those other conversations, understanding what other countries want too, so you can see where American interests can, best have the opportunities in your day-to-day work.
Yeah, I mean, the IMF is a really unique institution. It's one of a kind. I mean, it's the only institution that can step in to a country and look holistically at its fiscal, its monetary, its external position, its financial sector position. And as many people know, it's also what I would consider the world's financial firefighter. So if a country gets into economic distress, the IMF steps in. It can bail it out, but it bails it out along with other assistance from bilateral providers, often the U.S., and other multilateral providers like the World Bank. And it imposes economic conditions as part of that bailout. Those are really important because they're aimed at making sure the country doesn't get in that situation again. So when the IMF comes in to a country, the U.S. obviously often has very strong views, particularly if that's a key recipient of U.S. assistance, a key partner of the U.S. And I worked very closely with the staff on the ground. I also helped coordinate the IMF with U.S. government, including Treasury Department, USAID, often linking them to the embassies to make sure that what the IMF was negotiating with that country on the program size and the financial resources, on the economic conditions, aligned very well with where the U.S. thought that country needed to go. So, of course, there was some give and take there, but a lot of it was that. And often, when a program approval, when a new program is going to the board for approval, there's a lot that goes on behind the scenes before that program goes to the board for a vote. And that's where my role came in, which was, how are we steering this in the right direction? And then when you get in the board, you actually do the vote and make your statement. But that's really the end of the process in terms of my job, or what my job was.
And one of the other high profile delegations there, of course, would be the Chinese delegation. Could you talk a little bit about your engagement, how with your Chinese counterpart while you were at the IMF?
Yeah. China was a big, it's how we counter China, how we engage with China. Huge objective for the last administration, huge objective for this administration. I was lucky because my counterpart was from the People's Bank of China, and he was very reasonable, but also really willing to engage. So we sat down quite a lot to exchange views. I really got an understanding where the Chinese were coming from on some very big issues related to debt. As you might know, China has lent a ton of money to low income, emerging markets, countries that can't sustain those debt levels. A lot of this lending was not very transparent. But China was not very willing to restructure it when these countries got into economic distress. And talking to my counterpart, we were able to move the needle. I was able to understand a bit more some of the complexities, in China to restructuring debt. It's really a cultural issue as well as an organizational issue for them, and also a domestic issue because they have a lot of bailouts domestically. And if you start bailing out countries you've lent to, do you also have to bail out, localities? And then he was able to understand kind of where I was coming from. So that was a great part of the job, was engaging with my Chinese counterpart to move the needle on some of this, but also push a bit and push management at the IMF to push on him and his authorities and the Chinese government to move forward on debt restructuring.
When you talk about moving the needle there, was it more in just in terms of understanding where both countries are coming from, or actually getting some actionable outputs, moving the needle in terms of having the conversations, using that diplomatic approach to move a result more towards American global interests?
So I think it was moving the results. So there were quite a few countries that underwent a common framework treatment. Common framework was an agreement reached by the G20 right around the COVID or during COVID to help provide more coordinated debt relief outside of just the Paris Club debt relief process. The Chinese agreed to it, but when push came to shove, they had a very difficult time implementing it. Again, a lot of this had to do with internal procedures where they had to go all the way up to their state council to get approval for things, but also it had to do with cultural issues. I mean, they typically don't relieve debt. They just extend and reprofile and say, oh, the country will pay us someday. That doesn't work in the international context for restructuring. And that doesn't provide a clear indication to the IMF that this country's debt is going to be sustainable. Therefore, we can lend to them. So we did move the needle. It took some time. And I use the grand we here because the IMF itself also played a very, very large role, and of course, Treasury Department too, and the State Department. But we were able to get China to move on countries like Ghana, like Zambia. I think Ethiopia was underway. They even provided some assurances about restructuring in Sri Lanka, which is an emerging market country that had quite a lot of debt. So we did move the needle, but it took a lot of work and a lot of time. But and there is way more work to be done on that. But we made some progress and some headway.
Let's move a bit more bigger picture to the IMF and how they assess political risk. So how does the IMF approach assessing and mitigating political risks associated with primarily political instability in developing countries, emerging markets, frontier markets?
That's a great question, and I think very relevant right now, because it's a real point of tension for the IMF. The IMF is not political. In fact, they cannot, unlike some other institutions like the European Bank for Reconstruction and Development, they do not lend on political terms. So if you have a country that has a government that might not be very well liked, but it's internationally recognized as legally being that government, the IMF can engage. The IMF, they're also not political scientists. They're economists. They're very good economists. Yet at the same time, when the IMF comes in to do a lending program and tries and puts together a set of economic conditions, they have to take into account the political environment on the ground. They have to take into account political willingness and whether a government is going to be in place in 6 months. So they have some good techniques for doing this. In the sense that, if there's a government in place, but there's an election coming up, they talk to the opposition party as well. If there's a government in place that says, oh, we can cut subsidies and bring our fiscal deficit down, but the IMF isn't sure they really can do it, then they'll come up with kind of a contingency plan. But this doesn't always pan out. And a good example is Kenya from last year. Kenya, they had a very tight fiscal position, large redemptions coming due in the markets, had agreed with the IMF to do a large increase in revenues in order to bring their debt to a sustainable level, avoid a debt restructuring, passed a finance bill. And then in June last year, all chaos broke out and protests in the street. And I think here the IMF did miss the boat a bit, because if you talk to people on the ground, this was as much about not wanting to pay taxes, but also not wanting to pay taxes to a government that people on the ground felt was corrupt and not providing services. And why would we then go give them more money? And really, there was a mistrust in government. And so that things have really become very difficult with Kenya and the IMF negotiations because they're trying to find a way. How do we structure a way to bring your fiscal position back on track, but also a way that's politically feasible and aligned with what people on the ground will support? No easy answers there, but you can see how sometimes this can go very wrong, and that's where the IMF, I think, faces a lot of challenges on these politically sensitive topics.
So in situations like that, or other examples globally, what are the limits then to what the IMF can do?
I mean, really, the IMF is only going to be successful in their lending if they have political ownership and political will. So that again, they try to find ways to demonstrate that, whether that is a parliamentary approval of some reform that the government has agreed to do. But it's tough. A very interesting case is Argentina. Argentina had two successive programs, the largest programs in the IMF's history, that essentially failed. One went off track, and the other one, I should say, succeeded, but only after President Milei was elected. These programs were, every single review. I could say now, everyone was looking at this saying, should they really get the money? Because they were kind of doing the bare minimum of what needed to be done, agreeing to do certain things, and kind of working their way around it. And then you have President Milei come in, who has a whole different political mandate, and there is government ownership, popular ownership around, we've got to get inflation down and we've got to rein in the fiscal deficit and fiscal spending to do that. And wow, I mean, what a sea change within a matter of months, where you have a government that is actually executing on what they agreed to. So I think that is a really stark example of the IMF can design a perfect program. On paper, it can look so wonderful, and you can see, oh, yes, if all these steps are taken, economic stability and growth will reign. And then you get on the ground, and it doesn't happen if there's not the political will and the political ownership.
And is there anything the IMF can do, or are there other parties that are engaged to foster that political will, or maybe even assess, what's the, there's the language of the agreement, and there's the spirit of how it's going to be implemented. I assume that's not just totally up in the air. There's something within the IMF's control. How does the fund approach that?
Yeah, I mean, I think you're asking exactly the right question, Mike. It's the same question we asked at the board as well. When I was sitting in the executive board, what can you guys do? It's tricky, right? I think here the IMF can have my personal recommendation would be to have more engagement with folks on the ground, outreach strategy, strong communication strategy. Like the Kenya example, going back to that, I actually met with CSOs and NGOs that were on the ground in Kenya, and it was apparent that this was not going to work out because they simply didn't trust their government. In other cases, Jamaica is, I think, a great example of a country that had to do a really, really steep fiscal adjustment, but it had the buy-in. And so here, I think the IMF, they probably could do a little bit more in terms of engaging with those development partners on the ground, with those CSOs. In some cases, I think that might provide more realistic insight into what is doable. And you're not just relying on the government saying, oh, no, don't worry, we can do it. And I think that could be helpful. And then engaging with all of its other partners. I mean, the World Bank has a different look at this. Some, again, CSOs, but also, bilateral aid agencies, pulling in all of those perspectives. Private sector, that can also be helpful. How does the private sector view that? So I think that would, in cases where things have really worked, I think the fund has done that, but there are cases where it's been a lot trickier, and maybe they haven't gotten all of those insights or haven't gotten them right, in terms of their assessment of what all that means.
Well, that's interesting. So it goes beyond just talking to the current head of state or the current leading party plus the opposition if an election's coming up, but really understanding the conditions on the ground and trying to get a broader landscape assessment perspective from other parties. Are there tools the IMF has to engage with those local civil society organizations or NGOs, or informal associations, or do they rely on the World Bank or other partners for their assessments to get that information?
That's a great question. In many countries that have a lending program, the IMF has a resident representative. So that's a person that is an IMF person that sits on the ground. They have local staff, and so it's really up to them to help facilitate a lot of this on the ground engagement. And some of them I think do it better than others, but they're really kind of the key interlocutor. But there's also in regular meetings with CSOs. I think it can be very country specific, but some country teams do this very well from the IMF, and some I think have more of a challenge. But those are the main tools: is just having this outreach and regular communication. I think the other piece is the IMF needs to explain what they're doing, and in some countries, having the IMF in your country is really seen as a negative, right? It depends on the country, but in Asia, for sure, you don't want the IMF sitting in your country for most of them. So justifying and explaining why this is not a bad thing, this is a tool that the country can use to really build private investment, and show that they're on the right track. So there's a little bit of a messaging strategy that when I was at the board, I know myself and quite a number of others, we would sit in a review for a program disbursement, a disbursement of the loan, and say, what's your communication strategy? Do you have one? Has the government developed one? Why haven't we seen it? So asking those tough questions at the board was another way to really push the teams to go a little bit out of their comfort zone. Because again, these are economists, very good economists, excellent economists, but they're often not political scientists. And so pushing those teams to go a little out of their comfort zone and hear from everyone, that's another tool that I used when I was in that role.
So in the U.S., we obviously have the new administration about 2 months in right now. Have you seen any early indications for how the Trump administration is going to use the IMF or engage with the IMF as part of their political and foreign strategy and foreign policy?
That's $1 million question. I think not just on IMF, but on many international topics, right? But not yet. What I can tell you is I was at Treasury running our IMF office for the last Trump administration for all 4 years almost. And in that instance, the Trump administration not only bought into the IMF as a tool, but they also increased the size of the IMF's crisis resources and got that through Congress. So I think that's hopefully a good sign. Obviously, this time around is very different on a variety of different topics. But I'm hopeful that the administration will see the value. In fact, I'm going to be coming out with an article in the next few weeks under the Atlantic Council to talk a bit about why the IMF is a good deal for the United States. It's essentially cost-free because the IMF acts as a swap line. So the resources that we hold there, we earn interest on. So in some years, in fact, last year, we made money off of our participation in the IMF. We made a small amount of money, about $400 million. I think that's a good thing to highlight. And the benefits are huge. I mean, the U.S. is like the institution is located here in the United States. We have the largest share by far. We have a very strong voice. So we really have a lot to gain because this institution they simply can provide more financial resources and they have more heft than the U.S. alone. So if we come in and really keep that strong voice, we can achieve goals way beyond than what we could do on our own.
Could you talk a little bit more about that? It seems the foreign policy is driven by America first. So how can the IMF be used as a tool to promote American interests globally?
Yeah, I mean, that's a great question. And there is a tension there. I spent quite a lot of time also pushing back a little bit on how the IMF framed some of the trade measures that the Biden administration took, including things under the IRA and trade measures we had kept in place on China. Obviously, now we're in a whole different world when it comes to trade. So I think there is some tension there, but I also think the IMF, they recognize that we're the biggest member and that we have a lot of weight. And so what I really pushed is, look, you guys, let's work together, recognize where you're coming from. But I think you need to also be clearer about what some of these existing tariffs and existing industrial policies are in place. So that's, working with the IMF around their messaging so that they have a really even-handed tone and assess economic issues from a neutral point, I think that could actually be helpful to the US because then that comes out with, well, this explains why the US is doing what it's doing and why other countries have done what they've done. But, more generally, I think, continuing to work with, I mean, look, we also have a lot of presence on the ground. Our embassies are still there. They're very engaged. They provide a lot of insight to the IMF, and so we had a very when I was there, and I hope moving forward, a very regular drumbeat of engagement with different mission teams that worked in different countries to exchange views. And I think they found that very helpful, and we found that very helpful. And often the teams look to us, what do you think in Ukraine? We know that you care about corruption. Here's kind of what we think. So there's an exchange of views that happens that it doesn't necessarily happen with every representative around that 25-member board. That means that the IMF really can take on board a lot of what we're saying. At the same time, I also think it's in our interest for the IMF to remain an independent voice. I think that could be helpful to us too, because sometimes countries don't want to do things just because the U.S. wants them to do them. So if the IMF comes in and kind of provides its stamp of approval based on its economic analysis, I think that's helpful.
Great. Let's move to more so what for businesses doing business and looking to grow or to start doing business in emerging markets. Let's first start with, how do you segment emerging markets and frontier markets? What do those mean to you? Are those two distinct boxes or groups of countries?
I think you could define them in different ways. To me, frontier markets are those that have maybe not as readily available market access, or when they're accessing markets, it's at much higher rates. That's how I tend to think of them. Whereas emerging markets are more steady. They step more steady access to markets. They're tapping markets regularly, issuing euro bonds. So that's a little bit how I think them. And it can be a fluid category. Um, you know, Across those two markets, I also think you need to look at how resilient these countries are in terms of their fundamentals. I mean, I think that's an important thing to look at, and I can get into that a bit more. But just kind of answering that question, that's how I tend to bucket them.
Well, let's look at start with the challenges then. So if you're a business looking to again start or grow your work in these markets, first off, what are those key challenges? Maybe some of them are pretty obvious, but what are some of those key challenges facing businesses operating there?
Yeah. So I think, my suggestion to those businesses, and this is coming from my stance looking at the macroeconomy. Obviously, you need to look at your
Hmm.
specific business and sector
Sure, your
within
specific
that
market, of
country.
course. Yeah.
That's right. But what has held true for me in all the years I had worked on the IMF is that the countries that have the stronger institutions, that have the more stable fiscal positions, that debt to GDP is also stable, or it's at reasonable levels. They have an independent central bank that is able to set monetary policy. And for the most part, they have a flexible exchange rate. Those countries have sound fundamentals. And you will find that regardless of whether it's a COVID crisis or a global financial crisis or any crisis, that country is more able to weather those shocks. And that becomes a more stable place to operate. And oftentimes that means that the country also has better regulatory structure. They're more open to doing foreign investment. So those type, I'm not going to name names, but those are the characteristics I would look for in an emerging market. That's not to say you shouldn't go into an emerging market that doesn't have those characteristics, or a frontier market that doesn't have those. But I think you need to go in recognizing those risks. And here, I think, bring it back to the IMF, that macro level assessment is really where the IMF shines. And going to look at their surveillance reports, and if the country has an IMF lending program, looking at what that program is recommending the country do, you can get a lot of big picture insights into whether or not you want to go into that country.
How much is it worth reading into if that business is looking at the relationship between the country and the IMF? If it looks like a really productive, collaborative relationship, everyone's on board for reform, can you read too much into that? Or is that potentially a good sign versus if it's adversarial, or, they're, I don't know, maybe they're not the the spirit of the implementation from the country it isn't in line with what the IMF's hoping. Can you read too much into that, or is that maybe an indicator that a business could take a look at?
Yeah, I think that's a great point. And I do think you should read into it. So I was just looking at one of looking through the IMF's press releases, and I noticed, you'll see sometimes the IMF mission team will go on a mission, and they'll release a press release afterwards, and it might say, we agreed on this, we agreed on that, all of these good things, or it might be about 5 lines and say, we met. So reading between the lines on those press releases, you can really tell, is the country on the same team as on the same page as the IMF? Obviously, the IMF, they're not always right about everything, but I think it can tell you whether or not the country is really moving forward with some of the reforms. The other piece is that when you read some of these IMF reports, there are sections called the authorities' views. I always read those very closely because the report, sometimes mother had an apple pie, you've got to do this, you've got to do that. But then you get to the authorities' views. And if the authorities' views basically say the authorities disagreed with almost everything the IMF said, well, that's an interesting signal of where the government might be, right? And the governments sign off on those authorities' views. That's their language. It's not the IMF's language. So it's an important signal of where the country is in terms of its relationship. And I think stronger relationships do tend to be better, probably for investors going into those countries.
That seems to be a very good data point to look at. So then, other side of it, opportunities. Why would you want to do business here? What are those opportunities in these markets?
Yeah, I mean, I think again, it comes back to the resiliency. We're in a really uncertain time, so I don't think I could lay out any specific opportunity and be sure I was giving the right advice. But if the country is resilient, one thing to look at, for example, is those countries that have precautionary lending lines from the IMF, and that's a small subset, mostly in Western Hemisphere. But Mexico is one, and Colombia is another one. Those countries have actually met the higher bar that the IMF sets around your institutional strength. They're not actually borrowing from the IMF, but they can borrow from them if they need to. It's almost like a credit line or an insurance line. That's kind of a signal that this is the country that really has the sound fundamentals, so much so that they can borrow very large amounts from the IMF if there is a liquidity crisis, but they often don't. In fact, Mexico's never tapped its credit line with the IMF. So, so there are opportunities there. I think you look for the countries that have the sound fundamentals, and you go in that direction. And if you're going to the other direction, you need to just recognize what the risks are.
Great. Well, with that, Elizabeth, about wrapping up here, what's the so what you'd like to leave our
Yeah.
audience with in terms of what's the IMF's role globally?
Yeah, I mean, as I said at the outset, it's a unique role. I mean, this is the only institution that has 191 members and assesses every one of those members' macroeconomy, fiscal through monetary through exchange rates on an annual, or for some smaller ones biannual, but on a regular basis. So, businesses should look at that. I mean, take advantage of this. Development partners should look at it. I was often surprised that some members of the U.S. government were very aware of the IMF. Some were not so much. It's important to understand what they do and the information that they're producing, particularly for countries that maybe don't have as much markets coverage. It's a gold mine of information. So if you have a country that you're looking into and you're not maybe getting all the information you want from market data, which is quite frequent, you go to that IMF surveillance report or that IMF lending program report, and the numbers you see in there are numbers that are not produced by the government, but they're numbers that the IMF has taken from the government and put their own stamp of approval on. And the board, the executive board that I sat on, ultimately approved as well. So there's really a gold mine of information out there. You didn't ask me what the IMF should improve, but I think they should improve their website because it's not the easiest to understand. But if you can get through it, it's going to provide you that big picture take, as I said, on where the government is, what reforms they need to do, what the IMF's assessment is, and give you a lot of information about how you shape your specific objectives in that country.
Well, thank you. Elizabeth Shortino, the former acting U.S. Executive Director to the IMF. Really appreciate you being on the podcast today and looking forward to your Atlantic article coming out in a few weeks here.
Great. Thanks, Mike. It was great to be here.
Great. Thank you. Have a great day.
Thank you for tuning in. If you enjoyed today's show, be sure to subscribe wherever you get your podcasts and connect with Mike Shanley on LinkedIn.